Prediction that has everybody getting ready. CCN reports Goldman Sachs has predicted that the price of gold will rise this year, driven by fears of slowing economic growth, according to CNBC. In the next 3 months, the investment bank has forecast the price of gold to hit $1,325 per troy ounce, up from $1,250. Now, according to Goldman Sachs analyst Jeffrey Curie, the price appreciation will be driven by investors looking for safe havens and reserve banks who are worried about rising geopolitical tensions. Well, joining me now to explain what that means for you and your money is Colin Plume. He's our resident expert and sponsor from Noble Gold Investments. You can give him a call right now if you want to skip to the end, 888-596-7916. Colin, this news it's good for investors, but also indicative of global instability in the markets. What's the driving force behind all this?
Well, I think December, as you noted a few times, was one of the worst months for the stock market since the Great Depression. And so it's all this kind of perfect storm. You have interest rates rising. You have geopolitical concerns all over the globe, and you're just seeing people come out of the woodwork and buy gold. For instance, China had not bought any physical gold. They had bought gold mines. They had not bought any physical gold since 2016. They did a very large buy a few weeks ago, a number of tons of gold. And so you're just seeing a lot of safety strategies, defensive strategies in terms of investing. And I think you had the stock market pull back, you have rising interest rates, and then you just, the time right now for Americans is typically right now people are looking at taxes, they're looking at their statements for last year, and they're realizing that they've lost a lot of value. Not everybody's watching their portfolio every day or every month, and they realize, hey, I got my statement here, I'm substantially down, and is it going to continue to get worse? And so they're just pulling out of equities and moving into safe haven investments.
Yes, last month you mentioned markets were rocked by the Fed rate announcement. So do you consider this 10% rise in gold, is it related?
Absolutely. I think there's no doubt that people see the writing on the wall in terms of the economy. And, our economy right now has been built on cheap money. That's what companies have been rebuying their own stocks, which is helping push the price of stocks up. If interest rates go up, that means the cost of borrow is going to go up, and there's so many indicators out there that are going to slow down. Some of the biggest ones is the housing market. If interest rates continue to go up, the housing market's going to tumble. That's going to affect jobs. That's going to affect people's overall net worth, because the majority of people in the United States, their net worth is tied up in their home and the stock market. So their values that they have inherently are going to go down. So these things are going to continue to happen. There's no turning back. And, as much as, President Trump has freed up a lot of money through less regulation. We had the major tax reform last year. He's done a good job. There's only so much you can do in terms of the markets, and I think that people are really cautious right now, and that's why we've been incredibly busy. The week after Christmas, we usually just kind of have a skeleton crew here, and it was literally the busiest we've ever been for December, just in terms of people looking to move their IRA and get out of stocks and bonds and move into something safe.
Well, I could only imagine. I mean, I know my father, he has some investments as well, and he was like, look, the markets are taking a hit. He's like, I'm losing money day by day that the Federal Reserve continues with this insanity. Is there anything or any indicator that the Federal Reserve is going to back off because of the actions that they took last month?
They should, but it seems like it's a personal vendetta against the president. Now that the president has really called them out, I think that right now, if they can continue to raise interest rates and maybe put in a president that they want, they have the ability to do that. If they continue to raise interest rates, obviously the economy is going to be affected by it. And there's typically the mandate for the Fed is they base it on the CPI or inflation, which is historically still very low based on their numbers. So it's odd that they continue to raise interest rates, but it definitely feels like they have something for the president. And, I also say, Gary, we joke about this, kind of talk about this, but, last time I asked you, if I could just give you $100,000, what would you do with it? And I know last time you mentioned you would just buy a Corvette, which was a great answer. But
no,
seriously,
Ferrari.
A Ferrari. I apologize. So today, though, if you had that money in your hands, based on everything that you're seeing, what would you? I mean, obviously, would you put it in the stock?
No, not at all. If there's a sound prediction that gold's going to go up 10%, put it in gold, ride it out.
Right.
I mean, that seems to be the smartest thing to do, especially when you do have the instability created by the Federal Reserve's vendetta against the president, the larger central banker vendetta, global central bankers who don't want to see an America first rise to the ranks and, of course, outdo the globalist agenda that's been pushed for decades. The president's undoing. So yeah, I would go into gold.
Yeah, and I think it's one of those things that, one of the things that people always have to look at is you have to look at where your account is today. Don't worry about where it was when Trump got in office and we've had this great growth. Even if you're a little bit down from there, it's okay to move into other assets and kind of recalibrate your portfolio. And I think that's what most people are doing right now. And I think that's, this year, it is obviously going to be a scary year for the stock market. A lot of it is you have, Apple's had some horrible quarters. They've dropped, Apple, company by itself is such a behemoth. They're, when they pull back, that affects the stock market. So I think we're going to see a lot of larger corporations pull back money, not hire as much, kind of get defensive also, and I think that's going to continue and just kind of have an overall slowdown of the economy. And that's, when you see those things happen, that's when people typically will sell, and that's what can trigger a pullback. And every pullback, this, Gary, every pullback in history of the stock market happens within 6 months. 2008, 2001, 1994, 1987. If you look at all of those, all that growth happens that pullback happens very quickly. So, to get into something safe and then, ride the storm out for a while is a good strategy. And I think for, Wall Street's doing it. The question is Main Street going to be safe? Regular people, are they going to make, strategy? Are they going to pull out and move into the right areas? And that's really the thing that's important, because I remember people in 2008 calling me, they felt like something was going to happen. They just weren't ready to make the move. By the time they were ready, some of their accounts had dropped 30 or 40%, and that happened very quickly, which is obviously frustrating and devastating all at the same time. So hopefully people are more cautious this time, because you have to make sure that you protect yourself when you watch your investments.
Well, the beautiful thing that you provide our viewers is the fact that people can take possession of their physical gold. I've got one of the coins that you sent me here, and this is an example of some of the gold that you send out to people who convert their IRAs. And again, folks, the number on the screen is 888-596 7916, 888-596-7916. And you've got a free gold guide that you're giving away to Next News viewers?
Absolutely, yeah. They call in anytime. We can drop it in the mail or email them the information. And we have a number of free guides that talk about silver. We have the ones that talk about the inflation. John Williams wrote a great book for us last year talking about the true inflationary numbers. Inflation on his estimation is closer to 8 or 9% and not 2%. So a lot of money that you have just sitting in accounts, if it's just sitting in cash, if it's losing 8 or 9% a year, you got to make sure that you try to keep up with inflation and keep up that buying power. And that's why a lot of people have been calling us. So, all the information's free. We're here to answer questions. The brokers are available. You can call in 24 hours a day. If we're not here, we'll call you back whenever we're free. And we'd love to help anyone that wants to learn about what we do.
I should point out, because I do have a copy here of this gold guide. It's pretty robust. This is not just some flimsy little pamphlet you're going to get in the mail. This has got some very specific information. It's printed on heavy stock. They're not cutting corners with this, and it's beautifully made. So this is something you guys want to have to help you in your education. Now, it is a gold and silver guide. We're talking about gold right now. Goldman predicting a 10% rise in gold in the next 3 months. What is your longer vision for 2019, as well as for silver? Will it stop? Will gold stop at 10%?
Yeah, no, 10% is conservative, I would say, and that makes sense that Goldman Sachs would come out with that prediction. In terms of the number that I always look at for gold, and I don't know when it'll get there, maybe a few years or 5 years, but I always look at gold at 2,500, because if you look at where gold hit in 1983, it hit almost $900 an ounce. If you take the same money from 1983 and you applied it today, that would be $2,500 an ounce gold. So that's the number that I always look at, is that would be the number of it hitting its all-time high and kind of replicating what it did in the early 80s. And really that was, people bought gold then for the same reason they're buying it today, is that they were worried about the economy, inflation was heavy, they wanted to get into a safe haven, and that's from that time period after 1983, that's when gold and silver became an option in the IRA. President Reagan enacted the law and allowed gold and silver to be an option, gold, silver, platinum, palladium to be an option in an IRA. So if you have a tax-deferred account, you can put it into gold and silver. It's actual metal. We do not do any funds. We don't do any leveraged accounts. It's metal that you own. We're just helping you through the process of buying and selling it, but it's metal that you own. And it's really, if you think about the way accounts are set up today, it's really one of the few assets that you actually own by yourself, because everything else that you buy in an investment, typically you're just buying a share. Whereas with us, the gold and silver that you own is yours, and it's segregated and owned by you. And people really like that control, to be able to take control of their investments. And this is one of the few investments that you can actually do it.
Well, and not to discount the reality, the government has confiscated gold in the past, especially when it's stashed away in people's banks. But if you have physical possession of it, hey, it's your gold. And you do what you want with it. Yeah, good luck.
To get it. Most of our clients are protected, and they have measures in place to make sure that that's not going to happen. And I think that's what we do too. I mean, we make sure that everybody, if they get metals delivered, it's nondescript package to their doorstep, and we're involved. And I think people also, today's age, there's no one that you can talk to on the phone. You know this. You call places, you can't talk to anyone. We offer, if you do an IRA with us, we offer lifetime service on the account. So if you call in at any time, you can call us and ask questions about your account. Even though it's your account, it's your metals, we do offer that service. And it's so rare in today's day and age. I mean, people call me today. I had a guy call me and say, I'm not going to say the investment firm, but basically his account dropped below 150,000, and they basically said they didn't want his business anymore. They only wanted accounts larger than that. And so I think the average investor just doesn't get that kind of service anymore, because these big firms just want the big accounts. They don't want to help regular people. And we obviously we help people every day. No matter what the dollar amount is, we're here. So that's one of the benefits of coming with us, is you have a live person that you can ask questions to.
And from what I understand, Noble Gold is one of the only companies in America that has its own safe where you can actually opt to store the gold if you should so choose. Is that right?
Well, there's depositories out there. So Brinks, and there's other ones out there that store metals. The one thing that our depository does is they only offer segregated storage. So many of the depositories, what they'll do is they will, when the metals arrive there, we don't use any of these, but when the metals arrive, they will count it and then they dump it in a big vault. So you're just commingled. It's called commingled storage. The IDS depository we use is one of the few in the country that doesn't offer any commingled storage. So if you have, whether you have 10 ounces of gold or, and we have pictures of clients that have, hundreds of ounces of like silver bars that are sitting on a pallet, those are yours. So what they do is they verify it, and then it's shrink wrapped, and you have your own area at the depository, so it's considered segregated storage. So that's the big difference, and the reason that that's the way we only do it is because when you're doing commingled, there's no way to know what metals are yours. Segregated, you actually know what metals are yours. And so when Charles and I go to Texas and Delaware and Toronto, we can go there and do an audit. So you have metals there, Gary. I can go pull out your account. I can count them. And the only way you can do that is in a segregated storage facility, if that makes any sense. So we like the idea that the metals are yours, they're owned by you, and so that's the only type of storage that we offer for our clients. And we do go, last year, Charles and I both went to Texas twice. Charles went to Delaware, and then I went to Canada. So we always go and do a blind audit to make sure that the client's metals are sitting in the account for them.
That's awesome. That's awesome, Colin. Well, thanks for joining us today to help us understand the Goldman Sachs news and what to look forward to in 2019, of course, with the central bankers getting nervous with President Trump's America First agenda. They're pushing back, and that appears to be pushing the price of gold up. So people are taking advantage of that right now. So again, folks, the number on the screen, 888-596-7916. 888-596-7916. Give Colin a call right now. Also, there's a link at the top of the description. If you don't want to talk to anybody, you can always just hit that link and you can fill out the form to get your Noble Gold and Silver Investment Guide. It's a beautiful guide. I'm glad to have this in my library. Of course, my kids like to take a look at this stuff and see the shiny coins. So, Colin, have a happy new year. Thanks for joining me once again.
Always. Talk to you soon.
All right. That was Colin Plume from Noble Gold Investments. Give him a call, 888-596-7916, and they'll get you started right away. We'll see you at the next report. For the Next News Network, I'm Gary Franchi.